came in this morning, turned my computer on, and this popped up. And at first I thought this must be talking about the year 2020, right? The Twilight Zone. Very fitting. I don't know if you heard about this now, but now the latest health concern is a Godzilla-sized dust cloud that's supposed to come in. The things that have happened this year, if this was a movie, nobody would even believe it. Everything's different than it used to be. We have Vogue now is out there promoting a designer mask. We have these things called ghost kitchens. I don't know if you've heard about this. Ghost kitchen is a virtual restaurant. Companies like Chick-fil-A, Wendy's, BurgerFi, they are creating, there's no brick and mortar, there's no store. You just go online or on an app and you order food, and then they make it and they bring it to you. It's delivery only, so everything's changing. And in fact, when we look at a lot of the stocks and companies done well this year, most of them, or a majority of them, are surrounding the online, cloud, digital, virtual space. This came out a few days ago, and it looked at what companies have done very well since the March lows. This company called Wayfair is up 900%. Wayfair, if you don't know, is an online company where you can buy furniture. So you got all these people who are stuck at home, and they're staring at that couch, and they're thinking, you know what? I don't like that couch. We need a new couch. So they go online, they go to Wayfair, and they order furniture. Carvana, that's where you can buy and sell cars online. You know, a lot of these companies are really based with virtual. Zoom is a company we've used for a long time, and obviously everybody's using that now. DocuSign is another company that you probably haven't heard of, but we use it, and it's a way to sign digital apps, and it's, I think, up over 200% this year. So we've really seen a shift based on what's kind of going around and where the attention is and where people are going into. Clorox, of course, has done well, and Chipotle, I need to add, is probably up single-handedly because of me. I just love Chipotle, to be honest with you. But there's another thing going on. I mentioned last time this thing called Robinhood. Robinhood is an app that has commission-free trades, and it's really targeting millennials. Last I saw, they have over 10 million users of this thing, and over 50% are considered to be first-time investors. So you got all these new kids that are gamers and technology based that are really getting into stock trading now. In fact, I found myself the other day I watch these YouTube videos and listen to advice. I was watching a YouTube video by some guy named, I think, J-Dog. It was some kid with a backwards hat on, sitting in his mother's basement, and he was talking about how he plows through SEC records and been reading business documents to find mergers and the next potential IPO. And I mean, it was great information. So you have a whole new breed of investors coming up. You know, I talk about in my Financial Insanity how the world has changed and influence has shifted from man to machine, from institutional to individual, and from Wall Street to Main Street. And it's never been more true than right now. Another interesting fact, this guy named Dave Portnoy, he used to own a company called Barstool, and they were basically a blog it started out as, and they did a lot with sports gambling and gaming. And he sold his company, and sports, you know, kind of went to the wayside. So this guy has gone from sports gambling to day trading. And now he's basically leading the revolution of these Robinhood investors. And he is convincing them what stocks to buy into. And some of the professionals are looking down on it, but he's making money at the same time. And so these kids are making money too. And so you're kind of seeing the tug of war between the professional investors and the pajama investors, as I said last time. But the reality is some of the professionals think that the market is just completely overbought right now. You know, it's just continue to go up. Price is going up and earnings are going down. And eventually the dam is going to break and things are going to come falling. Everybody's trying to figure out when is that going to be. But nobody really knows right now. You know, I use an approach that's called an adaptive approach, and it's basically a trend following strategy. We look for uptrends or downtrends, or sometimes in between. So right now, things are kind of stuck in a muck. There's a trading range, and because of that, people said there's a new type of market out there. We're no longer in a bull market. We're no longer in a bear market. We're now in what's called a kangaroo market. It's going up and it's going down and it's hopping all around. And everybody's trying to figure out what is the next hop that's going to take place. Well, yesterday we had another big down day on pretty high volume as the Dow was down over 700 points because the corona fears are starting to come back. That's a real thing. If corona virus continues to go up, and now some states are starting to look at potentially locking down again. If we go through another lockdown like we did before, it would be devastating to our economy. I think everybody would agree with me on that. So where is the market and what do we think is going to happen next? Let's go to the charts and look at what's happened since the last video I have and what we're looking at now. Before I go into that, I want to cover some terms that I use just so that you're clear on what they are. Long and short are two words that you'll hear me say. In my world, when somebody is long, they think that the market is going to go up. So if you're invested from a long standpoint, then you're invested to potentially profit when the market's going up. If you are short the market, then you believe that the market is going to go down. And so you will invest in a way to potentially profit as the market goes down. So long, think about long as getting taller and higher, going up. And short is coming back down, looking to the downside. So sometimes I'll throw that out in the video. I just wanted you to be aware. Another term that I use is hedge or hedging. And this is kind of a broad term. Anytime you think the market might have a potential dip, you can obviously go in and sell things. Sometimes you don't want to sell everything. Sometimes you just want to hedge a position for a short period of time. And what that does is try to protect some of the losses without having to sell your positions. You've probably heard of hedge funds. Hedge funds have a lot of different strategies. There are a lot of different ways to do that. So whenever I talk about maybe hedging a portfolio, it's because maybe we're in that in-between land. We don't know exactly if it's going to continue going up, and we don't know if it's going to go down. So what we want to do is just play the probabilities and try to protect the positions in the meantime. When you're dealing with the market, you're dealing with the unknowns. So what you do is focus on probabilities. What is the probability of what's going to happen next? And the best way to do that is to look back over time and see what's happened in the past. And if you do that, you find out there's certain price patterns that continue to occur over time and will give you a pretty good idea of what could potentially happen next. Last time when we talked, I talked about a trend line that was out there. So a trend line combines the top or the bottom of certain prices, and what you'll see is that price will come down and hit it. Remember I talked about first touch, second touch, third touch, and if you go back and watch the video, I mentioned that when price comes down the fourth and fifth time, there's a very high probability that it could break through. It's like chipping away at glass. The more you touch it, the more it could potentially go down. And that's exactly what has happened. When we look at the trend lines that have formed, and like I mentioned again last time, there was a trend line on the top and a trend line on the bottom. And what we knew was that price would probably ping pong back and forth until these two things came to a head, and then the market would have to make a decision. Well, what happened here was price went up above the trend line but could not hold. And then we had a pretty major down day yesterday. And it also did so on pretty high volume. These bars that you see down here is how much volume buying and selling there was. So you have to factor in price and volume. And what we see here is each day that we've been having some of these big sell-offs, we've been having high volume at the same time. Then we'll have price come back, but the volume has been very, very low. And so the bias right now is definitely to the downside. When I look at our signals that we have, we got another short signal yesterday. So now what we're looking at is price is in a new area, and there's going to be a focus on a few things. So the previous trend line that was support has now become resistance. Support holds price up, resistance holds price from going up. So the new trend line now has moved down a little bit, and it's going to be right in there. But the bigger thing people are going to be looking at is this line right there. See where that black dot is? That is a 200-day moving average, and that is a very strong area of support because that's where a lot of buyers will come in to push price back up. So what you'll see is that price will probably trade in this little area right here, and then what people are going to be looking at is it going to trade up and close above the previous trend line? If it does, then a lot of buyers will pour in and we'll see it go back up. Or will there be a close below this 200-day moving average, then go down to what is called the 50 right here, and then on from there? So we might see a little small trading range over the next day or so while the buyers and sellers keep looking at each other, trying to figure out who's going to take command. And until that happens, it's anybody's guess. But once price breaks through either of those areas with much confirmation or high volume, then we'll get a clearer picture of what's going on and continue to go from there. And when that happens, I'll come back with another video. In the meantime, let me know if you have any questions, and please stay safe.